Hello, earnings season is heating up this week, so I'm going to make a video on a risk reversal strategy, and I'm going to use Apple as the example because I've been looking at this as a potentially attractive trade. First of all, a risk reversal is selling a put and buying a call. I've chosen the same strike price of $100 on Apple, which is just slightly below the current stock price, which on Friday's close was 101.42. Now I've done two contracts as the example, and the net cost of this position would only be $164.98. So by selling the two put contracts, I would receive just under $2,000, and by buying the two call contracts, I'd be paying just over $2,000. So again, for a difference of just $165 roughly, depending on your commission structure. I've chosen the October expiry so that there is a longer far out expiry because I'm not necessarily just playing earnings. I also believe that leading into the iPhone 7 launch, that Apple stock should be strong over this time period, and I don't want to have a negative position that is close to expiry if the earnings are bad. This way, I believe there's lots of time for Apple's stock to perform well, and over the next 9 months, I strongly believe it will be higher than it is today. The break even, as you'll notice, is only 187, so it's below the current stock price. And if at any time in the 9 months Apple's stock is higher than this, it will be in a positive position. The nice thing about this strategy is over time, as the stock rises, not only will be the calls worth more, but the puts will be worth less, so it can be closed at any time in the next 9 months for a profit if Apple stock is showing some strength. This strategy can also be used for many other stocks as well that might be attractive going into earnings. I also looked at PayPal and Qualcomm, and obviously you can do this for any stock. Just make sure to do your due diligence. I'm not suggesting that you go out and rush into these types of trades, but if you believe that some of the stocks have some near-term catalysts, or you would like the upside of the stock without putting a lot of capital down, this is a strategy where your net capital cost is very low. Sometimes, depending on the strategy, the way it's structured, you can even receive some money for putting on the position. If you want to sign up for my premium service, you would have access to customized editable options calculators, such as the one I've shown in my example here, where you can input your data and it'll calculate your break-evens, profits, losses, etc. Also, there's a daily email providing previews of the overall markets, top news items, and day trading stocks to watch, as well as a database of US, Canadian, foreign stock, and ETFs, broken down by sector with key metrics highlighted and color-coded to highlight which metrics are the strongest for certain stocks. There's also daily upgrades and downgrades with performance, and a Facebook chat to connect with myself and other members. Have a great day and happy trading.